Welcome everyone to our webinar, Switching to Impact, Contributing to Impact Investing in the Mediterranean. So this is part of a webinar series that SwitchMed runs to commemorate its 10 years anniversary of the program. So during these 10 years, SwitchMed has supported hundreds of green and social entrepreneurs and cultivated also a vibrant ecosystem with the aim to accelerate the transition to a circular economy in the MENA region. So today we would like to talk especially about access to finance for green and social entrepreneurs, but more specifically about impact investing. And also how the different actors have really contributed to impact investing in the region. So my name is Anaïs Mangin. I'm impact investment program lead at Oxfam. We are an international NGO engaged in the fight against poverty and inequalities. So we work with communities and partners in more than 90 countries around the world in the promotion of economic justice, gender justice, and climate justice. And as part of our work, we also use impact investing as a tool to scale our impact. And we are also running different impact investing initiatives across the world. And also, for example, in the MENA region, we have different work going on in the field of social and youth entrepreneurship, working also at the intersection with climate change and migration. So I'm going to be the moderator of the session today to talk about the state and opportunities of impact investing in the MENA region. And I'm delighted to have this conversation today with 4 inspiring speakers. So let's go. I'd like to start to a very quick refresher on impact investing. So impact investment are investments that are made with the intention to generate positive, measurable social and environmental impact alongside financial returns. And what we see is really that it comes in now with a variety of forms of capital, investment vehicles, with also different types of return rate, ranging from below market to market rate return, depending also on the strategy of the different investors. So what we also see is a variety of different organizations, actors involved in the sector, from institutional investors, fund managers, development finance institutions, but also philanthropic organizations. So it really has become a new way to address the world's most pressing challenges. And also we see a lot of opportunities in this sector, in specific sectors like the circular economy, sustainable agriculture, renewable energy, and also access to basic services like healthcare or education. So the concept of impact investing has been growing, and in 2022, the GIN, the Global Impact Investing Network, estimates the size of the market to be above $1 trillion US. So, however, it is still relatively new in many parts of the world, including in the Middle East and North Africa region, where the sector is really still in its early stage. However, international cooperation projects like we see with SwitchMed, or we'll also talk about another EU-funded project, Impact Together, are contributing to the development of new impact investment opportunities in the region. So by working with key players from venture capitalists, institutional investors, to business support organizations, and also policymakers, the aim of this initiative is really to make impact investment an effective mechanism to empower social entrepreneurs and really enable them to address some of the most pressing challenges in the region. So in this webinar, we will explore today what progress really has been made in the field of impact investing in the region and how this has also been achieved. Where are also the gaps, the opportunities, looking both at the demand side and supply side of finance, and also what is really needed to further continue with this transformation. So we have 4 insightful speakers joining us today to address this topic. Patrick Schröder, who is Senior Research Fellow in the Environment and Society Program at Chatham House, which is a leading policy think tank. So he specialized in research on the global transition to an inclusive circular economy with a specific focus on closing the investment gap and the contribution to circular approaches to achieving the SDGs. We also have the pleasure to have Sara Seganti, who is Capacity Building Lead at Impact Europe, rebranded from EVPA, the European Venture Philanthropy Association. So Sara is a social economy expert with more than 15 years of experience in building the social economy ecosystems in Europe and neighborhood countries. She's also coordinating a new EU-funded initiative called Impact Together that she can tell us more about it right now. We also have Oumelghit Guelzim. She's a social entrepreneur and also associate at Happy Smala. Happy Smala is an innovation lab which is based in Morocco. It's a kind of a research and consulting organization really dedicated to financial inclusion, entrepreneurship for impact, and sustainable finance. And Happy Smala has launched also the first crowdfunding platform in Morocco. So we are very interested to hear about this experience. And finally, we have Giacomo Pinafo, who is working at the Messina Foundation in Italy and is expert in the social economy. Previously, Giacomo worked at the FEBEA, the European Federation of Ethical and Alternative Banks and Financiers, coordinating several EU-funded projects. He was also impact manager at the asset management company Cefea, and contributed to the design and creation of the Switchers Fund, which aimed to be really a financial catalyst for green entrepreneurs in the MENA region. So I would like to kick off directly this conversation, and maybe starting a bit with more like the opportunities in impact investing. And here I'd like to especially focus on the circular economy, which has been at the core also of the work of SwitchMed. And so Patrick, I would love to have you here on this part. So could you tell us why and how we should finance the transition to a circular economy? Also, on the same side, we see that investing in the circular economy solution and business model is still seen as very high risk for financiers. So what is really needed to unlock finance for the circular economy? Can you please, give us your view on this question?
Yes, thank you very much for inviting me to join the webinar, and congratulations to SwitchMed on the 10-year anniversary. I've been working in sister programs in the Switch Asia program. I'm currently in the Switch to Circular Economy Value Chains program, which is also funded by the European Union and also the Ministry of Foreign Affairs in Finland. And we're working on circular economy. It's led by UNIDO. We're looking at the policy part. The EIB is also involved in looking at the investment opportunities. And there are also two countries, Morocco and Egypt, which are also part of the SwitchMed. So it's really good to connect and share experiences between the programs. And so the questions you're asking are really good. So why is circular economy finance important, and how to de-risk it? And I've prepared a few slides to show some recent trends and developments and show some of the research that we've done on this topic. So these are a couple of publications that we've produced for the Switch to Circular Value Chains program. Covers some of the key value chains, as well as some policy trends on circularity. And there are always links between policy and finance. So basically, a good policy framework and a good policy enabling environment is important to also attract investment from the publics, from the private sector. I won't go into details on these papers, but these are another two publications that we've produced over the last 2-3 years, specifically on circular economy finance. We have observed in this research, and you probably as well in the SwitchMed program, that circular economy finance is becoming more sophisticated and more attractive to investors, including impact investment. So circular business models are an area that many impact investors are looking at. And again, so this question about de-risking is still really important. And in this paper, we also show how the policy instruments are really important here. The other aspect are sustainable finance taxonomies, and we've covered that in a separate report. And that's another important framework that really goes into some detail including the European taxonomy, but there's others as well. What are the criteria, and especially like screening criteria for investments into circular businesses? The other 2 points that we highlight is that investments in low and middle income countries is really important, as well as financing the just transition. Low and middle income countries, especially, we see actually that most circular economy investments still go either to Europe or the US, Japan, but there's this gap that we see. And it's again a question about de-risking. So how do you make the countries, like the overall investment environment, more attractive to financial institutions? So and that's again also a question where public funds play a role, as well as development cooperation programs like ours. The whole Switch ecosystem can play a really big role in this, in facilitating these investments. Here, just a brief slide that circular economy finance is not necessarily, doesn't have to be a new category, but the existing sustainable finance instruments like green bonds or transition bonds, but also sustainability-linked loans and bonds, as well as the wider context of ESG investing. All of these can be used actually for circular investments. So there can be metrics and KPIs included in these existing instruments. So it's doesn't necessarily require setting up kind of like additional instruments, although that's also happening. Then another aspect that I wanted to highlight, and this is not from our publication, but a recent work by UNEP FI, who produced this guidance on resource efficiency and circular economy target setting. And one really important aspect of de-risking is to show that circular economy is not only it's not only about the environment and reducing environmental impacts, etc., but there are also clear economic benefits for clients. And so they've tried to show this in this chart, where you see on the left side the circularity impact assessment. And there's different aspects here. Environmental is only one of those, but reduced input of virgin resources, increased asset utilization, enhanced value of outputs, increased value, recovery after use, etc. And they're trying to translate that into specific economic benefits. And obviously, this chart doesn't necessarily quantify it, but if we can put numbers to these specific economic benefits, this really helps to make an economic case for circular business models. The other aspect I wanted to show is that, and this is the BlackRock Circularity Fund. So it's a slightly different category of finance, but that fund was set up in 2019, and there was quite big excitement about it. And this fund has developed over the last few years, and you see I've tried to track and show how it developed until April 2024. And so the green line is actually the return on investment over the last almost 4 years now, 3.5, and it's quite a good return, 30%, but still compared to comparator funds, which is like over 50%, so it's still lower. And this connects also to this risk indicator. You can see it's still that this fund here, which includes some of the large US waste recovery and recycling companies, but also there's also tech companies like Microsoft included here. It's still considered to be very high risk at a level of 6. So one of the challenges is to bring down this risk indicator, but keeping that return. I think if that develops, there's a lot of promise. And there are similar funds set up also by European banks. For example, Intesa Sanpaolo has a circular economy fund, which is also includes mostly European companies, is also a good indication that this is becoming more important. So then I wanted to show this circular economy finance roadmap that has been developed by the Netherlands. So they're looking at various aspects that need to be addressed in the run-up, like over the next few years till 2030. And that really includes kind of a lot of work to be done, especially when it comes to standards and for financing and the frameworks, metrics, you can see that, but also questions around how to scale investments. A lot of the finance institutions, there's this gap between, for example, smaller businesses, circular economy startups, and their finance requirements, and kind of the volumes that generally commercial banks are looking at. So they're looking for these landmark deals, but at the same time, they also, I guess what's happening within financial institutions is that they also need to build their capacity internally, as well as develop internal assessment and also risk assessment methods that are more suited to circular economy business models. And that's a roadmap for the Netherlands, but there's a similar roadmap that's been developed by a number of the multilateral development banks, including, again, EIB, but also the EBRD. They're part of this. And they have set a joint vision together where they want to take the circular economy over the next few years and beyond. So that's all from my side. So I tried to cover some of the main aspects, and I'm happy to answer any questions if you have any afterwards.
Thank you very much, Patrick, for this global perspective. I think it's here we see also the dimension with the circular economy that there are really like a variety of instruments already existing, but also it's it's also a sector which is sophisticated, that involves also a lot of changes in the way investors are doing, looking at the how you calculate the risk, the return, and also the impact. But yeah, now maybe to change and go to another perspective, and also after this more like global, also with this global international example, I would like to ask Sara now to come in, also to tell us especially about the experience of Impact Together. So what is this program that I started last year? Because when we look at 10 years ago, when SwitchMed started, so the impact investment scene was really different, and especially in the MENA region. So how is it now? How has the context changed now in the last year, and also what is the objective now with Impact Together in the region? And from your perspective, also from this experience, what are for you a little bit the key drivers for growth of impact investment in the region, and what is also needed to really overcome the current investment paradigm and to really go into more social and environmental perspectives? Sara, the floor is yours.
Thank you, Anaïs. Thank you for giving me the floor and inviting us. I'm happy to share a little bit about the MENA ecosystem. I have prepared a little bit of slides. It's a long conversation. I will try to summarize the main points, but I would really be happy also if the other speakers could then contribute with their knowledge. I know that they know very well this impact investing ecosystem. Yes, we are coordinating as Impact Europe this Impact Together project. It's not the first one that is funded by DG NEAR. We are working with DG NEAR on the Eastern Partnership region before, and we are really trying to support the social economy ecosystem, but also the supply side of finance with these projects. And when I say impact investing and the supply side of impact investing, I really have in mind a much smaller type of social investors compared to what Patrick was illustrating before with this big sustainable finance movement that is actually growing. I think that's a good parallel to make. Like in the last 10 years, we have seen a lot of growing into the sustainable finance investments, but also, I think, in the MENA region, specifically on the green entrepreneurship, there is a lot happening. We can see interest and a raise of awareness of traditional investors toward this idea of impact investing. Although figures from the gene that you mentioned at the beginning are still actually really picturing a very early stage impact investing market in the MENA region. Things have not radically improved since 2018, where we had the last data from the gene. This, like seeing the MENA region as I would say the smallest market in terms of impact investing volumes, still strikes somehow, considering the potential of the region. So there is a lot going on in terms of support to entrepreneurship, startups, mainly tech businesses. But when we have a look at data, we can really see that still there is a really lack of access to finance for social enterprises. So I wanted to share with you a little bit of slides. So voila. So just referring to the definition of impact investing that you were mentioning at the beginning, sorry, I wanted to highlight the work that Impact Europe has been doing. This is really practitioner-based research. So this information comes from our more than 300 members across Europe. When we define impact investing, we have the intentionality, of course, so the intention to create a positive social impact, as well as the fundamental component of measuring and managing the impact created. But we also have identified with our members this dimension of additionality, which means the intention of really support the objective of organizations to actually solve societal and environmental problems. So this actually is not compulsory in the definition of impact investing. So some organizations have this approach and others do not. But the majority of our members thinks that the difference with this additionality concept is that they actually fund social enterprises that would have not accessed finance otherwise. This, of course, entails major risks usually, but also major impact. This spectrum of capital maybe summarize a little bit what we were trying to describe. So this impact investing movement is quite, I would say, tiny compared to the big sustainable and responsible investments more linked to ESG criteria. At the same time, it's growing. There is more and more interest and also a growing understanding of the potential of this type of approach to really tackle societal issues. This is the gene figure you were mentioning before. So we can see that according to this research, even if the respondents to this survey are mainly based in the US and Canada, so maybe I think that probably part of these investments are not tackled by this figure, but anyway, the MENA region is still really the smallest market for impact investing. This graph here was actually produced by Alphanar, which is one of our partners in the region, one of the partners of this Impact Together project. They actually work with a venture philanthropy fund in the region, and they have now fundraised, and they will soon launch their first fund, the Lift Ventures. So they have done this analysis. Of course, it's not exhaustive. It's from a couple of years ago, but it was to show a little bit what their analysis was. So there is quite some offer of finance for startups, for SMEs at the very early stage of development, and also on the growth stage, so where there is more potential also economic opportunities. There is a little bit this valley of death that we identify in the social economy sector always for those small impact-driven businesses that do need ticket size that are really small, starting from 50, 100,000 euros. So the idea is that with this Impact Together project, we would really like to support our partners, but also the ecosystem in general to tackle this need of finance, of those social enterprises that actually need an additional investment to scale up, to become sustainable on the long term, and also to get a little bit out of what it's a little bit of a donor trap for social enterprises, that to receive grants can, of course, be a big help, and sometimes it's necessary for startups and very early stage, but on the long run, to survive on grants, it actually really kind of makes it difficult for social enterprises to build investment readiness type of approach, but also really a culture of the growth and finance culture, which in the end will undermine their long-term sustainability and growth chances. A few words on this Impact Together project that we are managing in the region. It started in 2023. It will last until 2027. It's financed by DG NEAR. We have great, I would add, local partners on the ground that deploy the activities, and the objective is really to support the social economy as a vector of job creation, to create a more inclusive economy, but at the same time with a focus on supporting the ecosystem building for social enterprises, and strengthening the capacity of existing impact funds, but also creating new type of financial vehicles that can address this actually need for finance of small social enterprises. How do we do this? This is very briefly of four I would say areas of work. So there is this huge access to finance component that we do fund development with our partners. We support fund creation, as well as our partners do direct investments. Direct investments to social enterprises on the ground. We promote a blended finance approach, which means the combination of grants with different type of financial instruments. The capacity building component is a great component of this project, and it's not just meant to transfer knowledge from us to our partners, but really to encourage peer learning across the region, as there is a lot happening already, and a lot could be learned by transferring knowledge across the region. Stakeholder engagement, which means that we have this experience as Impact Europe in building impact investing networks. And this is one of the areas that we think could really help the MENA impact investing ecosystem to grow, to bring more investors to become impact investors, and at the same time to leverage private funding. So using this money coming from European institutions to increase the amount of private funding coming to support social enterprises. And this is, as you know, a big opportunity as well as a big challenge, that SDGs cannot be achieved only with the public resources, but we really need corporates and private finance to step in. And this is really at the heart of the work that we do, that we think that more type also of organizations, not just investors, for example, corporate, development, financial institutions, also the banking system, could actually embed more impact into their funding programs. And then, of course, there is this ecosystem building, which is the policy angle that Patrick was mentioning, that is fundamental, how to support our partners on their respective countries to create a more favorable ecosystem for impact investing. We know that in the MENA region, there are almost no laws for social enterprises. Just Tunisia has one, but they are also still waiting for the regulations. It's a topic to be discussed, how much this is needed, but it's a recurrent conversation across the region as others want. So there is a need for governments and institutions to actually become aware of the positive impact of social economy and also create a more favorable ecosystem for them to thrive. I just wanted to briefly mention our partners on the ground, which are doing an amazing work, not just in terms of supporting the local ecosystem, but really exchanging between each other with a great enthusiasm, bringing a lot of momentum into the respective countries. So we are discussing about how much emphasis there is on this impact investing and how this could be leveraged by such a program. This was quick. I hope that it was kind of sufficient to answer your questions, but I'm happy to answer any questions that you might have.
Thank you very much, Sarah, for this immersion in the region. And I would pass it directly over to Oumelghit, who is also a partner of this program. But yeah, really, Oumelghit, can you please tell us from your experience? You're also an entrepreneur. You're also funding social enterprises in the region. So what have you seen? What has changed in the region, in the sector? And where do you really see the key factors to really contribute to the acceleration of impact investing in the region?
Thank you, Anaïs. Thank you to SwitchMed for the invitation, and thank you, Sarah and Patrick, for putting the floor for me to just talk about more practical things. So where to begin? So first of all, we are also celebrating our 10 years anniversary this year, especially that we did also an amazing job with SwitchMed on funding social and green entrepreneurs. So in Morocco, we started talking more about social entrepreneurship around 2010. So Egypt, Lebanon, and Tunisia, and other Mediterranean countries started a bit earlier. So new incubators, programs, and competitions started to be present in order to encourage social entrepreneurs, but also in order to give them the capacities and also the financial resources to be able to grow. So the programs were mainly for early stage and access to market to encourage creating more social enterprises. So the experience that we had was mainly around crowdfunding for the last 10 years, and as one of the major vehicles of to fund social enterprises. So in 2014, we launched Smala & Co., which is the first crowdfunding platform in Morocco. At that moment, crowdfunding wasn't legal in Morocco. We were based legally in France, but operating for the Moroccan market. It's a reward-based crowdfunding platform, and some other platforms were also already operating in other MENA countries. I'm thinking mainly about Zumal, operating in Egypt, Lebanon, and also serving some other MENA countries. So we found that this type of crowdfunding was very adequate to fund social projects. And by the way, that was also my case. So this is how also I integrated the Happy Smala. So I was looking for funding for one of my social startups, and I only could make it through crowdfunding. So there was a lack of funding for these social projects. So we were engaged a lot in raising awareness, capacity building, making studies about crowdfunding in Morocco and also in the MENA region. We did an amazing job with SwitchMed with 2 programs supporting social and green blue entrepreneurs, launching their crowdfunding campaign, and also some regional studies to understand how much money is raised through this vehicle and also how much effort we can put on it in order to be able to help the social entrepreneurship ecosystem to have more solutions to of funding. So the crowdfunding journey was long, and also it was very, very exciting. And now it's legal in Morocco, finally, 10 years later. And 3 platforms will start operating very soon. And according to the last crowdfunding barometer that we did last year, so the funding through the fund raised through crowdfunding for Moroccan projects are just increasing, and we still didn't have any law at that moment. So now with the law, we are so eager to see what's the change, and also how will that impact the social entrepreneurship ecosystem. So in the other hand, this ecosystem has grown and more programs were launched and more funding is available, but mainly for the early stage. And the work that we are doing now with Impact Europe, so as Sarah mentioned earlier, is to serve social enterprises that are more mature. They access to the market. They are selling. They have already the enterprise established. But now there is a lack of funding because the funding available is mainly for early stage, the seed funding one, or for very big major enterprises. So we call it the value of the. We have a graphic that is very similar to Alpha one that also we did in a co-creation workshop with the social entrepreneurship ecosystem. So it's a funding gap because actually we have big tickets or only small one. The social are actually operating in the market. So through Impact Together and also all the MENA countries, so we are creating impact funds that are dedicated finance model that will bring foundations, business angels, banks, microfinance, and also other NGOs, national and international one, to the table. We are bringing them to the table to do cross-funding for social enterprises, supported by a grant ticket from our side through the EU funding. So stay tuned. We will publish right after that the results of our pilot program in November to have the learnings. What happened? Is it something that works for the context of this country? And this first round is also a way for us to do this testing at a small level, and then maybe scale it to more social enterprises here in Morocco. So talking about key factors. So there is a sentence in Arabic is that the need is the origin of innovation. So I think actually the need of having impact projects, social enterprises is the fact that we started creating them to help tackle the social and environmental issues we were having and we're living in our society, and to have this mindset shift. Mainly 2-3 things to make is, for example, first of all, we need this capacity building for social enterprises, but also for funders. They need to understand what is this impact investing. We need to measure the financial growth, but also to measure the impact, to be able also to optimize the money that we spend on these social enterprises. We have this raising awareness. We need to understand that the social enterprises are also financially sustainable, and not only classical businesses, and investors can also put their money on these social enterprises, help tackling social and environmental issues in our societies, and also be financially sustainable. So that is all for me. If you have any questions or any clarification, please do not hesitate to reach out.
Thank you very much, Oumelghit. Very, very nice to hear. Congratulations for all this work and to hear about this very specific experience in Morocco. Now we will have Giacomo, who will also tell us about the Switchers Fund. So here we're very interested also to to hear what you have done with the SwitchMed team, and also, yeah, what is the Switchers Fund? Which problem is it really like trying to tackle, and which solution is it offering? Giacomo.
Thanks, Anaïs. Sure, I'd be happy to share the updates on the Switchers Fund. Basically, well, our main focus is the social and green economy enterprises, because we believe that these organizations are now at let's say, critical point, meaning that on the one hand, they are facing, like many other organizations in the world, the issues of the different crises, so the social crisis, economic crisis, war crisis, climate crisis, and so on and so forth. But on the other hand, at the same time, there are also very high expectations on these enterprises, because they should lead the transition, the environmental and social transition of our communities. So expectation from social social communities and from institutions are very high, because these organizations have been dealing with social environmental issues for years. It's in their DNA. So let's say they're expected to have a leading role in this transition. So in order to address these challenges, social and green enterprises need to do investments and to strengthen their networks. And this is the focus, let's say, of our fund, of our action. Meaning we are trying to have, let's say, an ecosystemic approach. So not just focusing on single individual organizations, let's say isolated, but on ecosystems, local ecosystems. So organizations which are integrated in local social economic ecosystems, because we believe that in order to achieve local transition processes, we need to have the engagement of several local stakeholders, therefore more structured ecosystems at the local level. And therefore, we want to address organizations, enterprises, which are actually engaged in local ecosystems in order to strengthen the enterprise and the ecosystem at the same time. So in the end, we are launching this fund, the Switchers Fund, in cooperation with MedWaves, and the first, let's say, targets will be indeed the switchers. So all those entrepreneurs, enterprises that have been also described earlier, and that have been trained in the past decade, I would say. And that therefore are perfect targets, potential target for this kind of tool. In the first step, we will we'll focus on equity investments, and actually with a venture philanthropy approach. So collecting that's for grants in order to be able also to have carry a higher risks compared to mainstream investors, let's say, exploring therefore unserved markets, or anyway, markets that are perceived as more risky by mainstream investors. And in order to have, anyway, a catalytic effect. So our aim is to be able to attract additional investors, additional partners, and increase, therefore, access to finance for our final beneficiaries. We perfectly know that we are not providing the a holistic solution, let's say, but we are contributing, let's say, trying to contribute to the provision of different solutions in cooperation with other actors, with the other local actors and international actors. So starting from the local networks that have been created by the SwitchMed program in the past years, and then building on this by engaging also other international and local partners. Therefore, combining the investment part, let's say, the equity investment part, with the capacity building support. We are using, from a technical point of view, let's say, we are using an Italian cooperative, which is also a social enterprise, which is called SFMed, which will be the one managing the fund, because this company was created back in 2002 and has been financing directly social economy sector throughout Europe for more than a decade. and therefore we are using that specific structure in order also to launch and manage the Switches Fund, which will be launched in the coming months, because we have now, let's say, completed the bureaucratic part in terms of aligning also the article of association and the internal structure of the company in order to be able to manage the fund. And we will now therefore we're starting the also fundraising part, targeting in the end not just the MENA region, but the Mediterranean basin. So targeting also, for instance, in Europe, the less developed regions of the EU countries, because we believe that anyway there can be a useful exchange of expertise, of know-how between the two sides of the Mediterranean Sea. So, for instance, in Italy, we are also targeting the southern regions, which are indeed facing very similar problems to those faced in the northern area of Africa and in the MENA region in general. So that's it for now, and we hope to bring, of course, more news in the coming months concerning the updates on the activities, on the fundraising, and on the investment part.
Great, thanks a lot, Giacomo. Very great to hear about all these different new initiative, design of new funds that are happening. So I think we can really see that things are moving, and so there's a growing market here in the MENA region, also a growing culture for impact investing in the region. I think today we had especially a great example, which were really also targeting a specific segment of impact investing, and this is, I think, also very important to take into consideration that impact investing is a broader sector, and also it's segmented. So in the example that we heard today, it's really targeted the segment that is focusing on the smaller, the SMEs, the social and environmental entrepreneurs, so the smaller one. So what I heard is really that in general, how can we really attract more private capital to support all this initiative for impact? Also, I really like this graph of the ecosystem mapping from Sara, where we can really see that there's a big funding gap also in the market if we think about the finance of social and green entrepreneurs. So with the examples, though, the importance of really de-risking, to really attract this private capital, the importance also of raising awareness among investors and among all the different stakeholders in the system, and also the importance also having the public sector and alliances, private public alliances, to really help to grow and help this sector to grow. So hearing about all of these experiences, I would like a little bit to conclude and ask all the speakers for their call to action. So if we would now think a bit about the future, the next 10 years, what do we really need, to accelerate impact investing in the region? So what would you suggest? I don't know, Giacomo, since you were the last one. Let's be the first one now.
Sure. Well, look, I'll be very practical, and I would focus on the regulatory dimension. So I would say that it's very relevant in order to have a fully developed investment sector, let's say, for impact investing in the whole region, to accelerate the evolution of the legislative framework in all different countries, easing access to finance for enterprises, and is making it easier also for international and foreign investors to work into the different local contexts, let's say, and different nations, because at the moment the situation is very fragmented.
Okay, Oumelghit, would you like to be next?
Yes, of course. So I'll be more focusing on the local funders. So one of the work that we're trying to do is to mobilize the local funders in order to join us in this impact fund, and to be able to experiment with us in order to find the right model that can be effective for social enterprises here in Morocco, because the contexts are different, and we need more local funders in order to ensure the sustainability of the impact fund model.
Thank you. Patrick, what is your view coming from like the more like global perspective?
Yeah, no, I agree with also what was said before. I think one of the big challenges is this fragmented situation. So a lot, pulling this together and have more coordination, especially not only between policy and finance and investors, but also I think there's a role to play for closer cooperation between Europe and MENA region. So SwitchMed is a really good example. And then we said over the next 10 years, hopefully there will be the 20th anniversary for SwitchMed, and then we can show all the good results. One thing from switch to circular value chains, so that's some of the work that EIB is now embarking on, is to really think through kind of like this question of what are bankable projects. This is really important. So moving from what's eligible from the different circular economy criteria towards bankability, and that's then again, or it has been always the challenge for SMEs as well, right? So I think that, so if we work closer together to improve the bankability, and that comes back again also to the de-risking part, so that probably helps, and I think we can still do a lot on that.
Thank you, Patrick. Sarah, you have the chance to be the
last one.
Give the last word.
a big honor. I would say that the call for us is probably at the regional level, what Oumelghit was mentioning for Morocco. So there is a need for support. So whoever is interested to support, either financially, these new financing vehicles that we're supporting to actually be developed in the region through our local partners, but also non-financially, because let's not forget, as we were all mentioning, that this capacity building and non-financial support is instrumental to the developing of impact investing as well as finance. We would really be happy to be in touch, so please contact Impact Europe. This is a growing movement that has to come together from different angles and experiences and capacities. So we would really be happy to contribute with others.
Thank you. I think that's the great last word to say, like for collaboration, and Oxfam also very interested to join forces with all of you. So yeah, thank you. Big thank you to our four speakers today, and for this very insightful conversation. And let's continue the conversation. And yeah, I would also like to thank to give a thank you to SwitchMed for organizing this space, this conversation, and also really cultivating this ecosystem in the region. Thank you, everybody.
Thank
Goodbye.
you.